Hey guys, John Paulamy here, Actionable Intelligence. Today's Wednesday, August 12th, and I felt like I needed to come on and talk about this big correction we're having in precious metals. Look, I said a couple weeks ago this is going to happen. We saw how overbought this was here. Everybody was talking about gold. It was on CNBC. Peter Schiff was out talking about $10,000 gold. Frank Holmes over at U.S. Global Investors was getting a lot of interviews. That's the intermediate top, guys. There was a lot of FOMO. There was a lot of tourists that came into this trade. A lot of people that didn't know what they were doing. They were buying up here. And this is what happens in a bull market. You have pullbacks. One thing you need to learn about these precious metals markets is there's stairs up, stair step up, and then the elevator down on the correction. So this is a correction in a long-term bull market. The underlying fundamentals of why gold has been in a bull market for the last couple of years have not changed. They've actually gotten better. So nothing goes straight up. This was a big move from here to here, and we're getting a violent correction. So it's going to drive a lot of shoe clerks out. A lot of bleacher bums now are going to sell and go away. But I think we got some more room here. We're going to have some more room on the downside. This could very easily come down and kiss the 50-day. When you're in a bull market, that's what you like to see, a 250-day moving average, both moving higher. And it just, rides along this 50-day. So you got way ahead of the 50-day. And, this is what happens. The mean reverts, profits are taken, and, you want an excuse why it went down? Okay, if you don't believe it was overbought. The PPI came out yesterday. It was running a little hot. It was the highest reading since July of, or not, in the last year and a half, excuse me. And, bond yields went up a little bit. So real interest rates and all that. But it's not really that. It was just looking for a reason to go down, so it's gone down. Am I in there buying yet? No, but like I've said, I have my stocks that I like. Not all of them have pulled back a lot, so that's encouraging. Some of them have got killed. I took profits on Caledonia, and it's gotten really nailed. It's dropped from about 29 down to about 22. So this thing is going to need to find a level and then consolidate. And then I suspect we'll see, moves to new highs later on this year. So this is what happens in an ongoing bull market. As I said, nothing really changes as far as the fundamentals. They're still positive. And what's encouraging me is as we talk about real rates, which is, the bond yield, 10-year bond yield, inflation minus inflation, that gets you into negative yields. And I'm starting to notice, I don't have the chart up here, but the oil chart is starting to look more and more bullish. I'm going to do some more work on that Saturday in the video Saturday, longer. We've got some more information around that. I'm also going to put out a public pick on Saturday. Some people have asked me not to do that, but these picks are like pretty obvious. They're big companies. They're companies that I think will do well. And I put them out there so we can track them and show you the methodology that's used to show you how I go about looking at contrarian situations. But the real big movers, the companies with a lot of potential. I mean, the thing I'm going to show you on Saturday, it's got a double in it maybe, okay? But I'm looking at things inside the portfolio that could go up 5 or 10 times. So I think oil and energy have been completely decimated. They're hated. And I'm starting to see some positive momentum, positive fundamentals are building behind a lot of these stories around natural gas, especially oil now. I think I'm going to show you some data that leads me to believe that demand is coming back and supply is still constrained massively. And I think that that's going to lead to higher prices, and it's going to surprise a lot of people. And then you are going to have a higher inflation rate than expected, and yet with the Federal Reserve saying they're going to keep rates down, that's going to put you well into negative rates, and we will see a increase in the gold price. because it's my view that negative rates are the primary driver. Negative interest rates are the main driver of the gold price. So just wanted to put this video out. We talked about it. I'm not dancing around. We got this one right. This was kind of obvious. I mean, this was so overbought. It was just screaming sell. So, and people's like, well, I'm not selling. I'm holding. Well, you can do that too. I mean, I have a core position that didn't get sold. I didn't sell any metal. I sold one stock that went up 50% in 1 week. A lot of the stocks that I hold that are gold producers, I still are holding through this. And just think of the tremendous leverage. You know, I'm looking at some of the earnings reports for some of these gold mining companies. You know, if you have all-in sustaining costs of $1,100 an ounce, and the gold price was back here at, you know, when it was back here at 1,200 or whatever, 1,400, and you were making $200 an ounce, and now it's, you know, 1,900, you're making $500 an ounce more. So if you were making, you know, $200 an ounce profit, now you're up over 150% in your earnings. The leverage that you have on earnings is tremendous here. So I think as long as these prices, as long as we see these moving averages moving higher, as long as we see this kind of ride along here, that's what you want to see. And then she got a little bit ahead of herself. Now we're going to pull in. We'll consolidate a little bit. This will go off the front page, and then it will more than likely start moving higher again. So this is working out just like we thought it would. Nothing to get excited about. It's not the end of the bull market by far. We're not even, you know, we're in the first or second inning of this thing. Got a long way to go based on what I'm seeing out there. So quick video, nothing to get worried about. If you've got your names you're looking at, you're probably, you know, going to be looking to be easing in on some names here in the next weeks or so. So keep an eye on it. We'll be back to talk to you some more on Saturday about our next public pick, and also energy, which I think is brewing up for a tremendous bull market. All right, guys, that's it for now. Talk to you when we talk to you.